Last Friday, we got the job report showing there was over 250,000 jobs created, and the unemployment rate went down 0.1% from 4.2% to 4.1%. And that caused the S&P 500 and the market as a whole to move up from its recent low in this consolidation area to the top of this consolidation area for the S&P 500. So now the question is this setting up for the S&P 500 to break out of this consolidation area into a new high territory, or is this another trap that it is setting before it breaks down from this consolidation area? In this video, we're going to take a look at the market internal to see if the market is getting stronger or getting weaker. Then we're going to take a look at some of the possible price action scenario for the S&P 500 and the Nasdaq 100 for the coming week. Let's take a quick look at what the indexes did last week before we go and take a look at the internals and also the price action. As you can see from this list here, the S&P 500 was the best performer for the week. It finished 0.22% with a gain of 0.22% or 12.9 points. And the second best performer is the New York Stock Exchange Composite Index. It finished with 0.19% gain or 37.6 points. Now, the key thing to watch is the New York Stock Exchange Composite finished with a new closing high. So we know that the market doesn't top with the market index, which is the New York Stock Exchange Composite. So this is a way that the market is also kind of telling us to expect another new high coming from the other indexes. And the Nasdaq 100 closed up 0.13% with a gain of a little bit over 26 points. And the Dow Jones Industrial gained 0.09%. It's pretty much unchanged with a gain of 39 points, almost 40 points out of the index sitting over at 42,000. Then finish off the list, we see the Russell 2000 lost 0.5% or 11 points, almost 12 points. And the Dow Jones Transportation is the biggest loser. It lost 2.3% or 372 points or so. Looking at this sentiment chart here, we see the VIX is sitting right near the 20 level. So obviously the market participants are quite cautious right now. They are not being bearish, not into this above 20 level or down here near the 10 level where they get maybe complacent. So right now it's sitting at 19.21 as a close of Friday. Definitely the market participants are cautious. And also the put call ratio is telling us that the market participants are not totally risk on and not completely risk off. It is sitting right near that 0.75. That's where we start seeing the market participant to start hedging their position. And on Friday, it was sitting at 0.72. So you can see that the market participants are quite cautious right now. Now let's take a look at the market internal. Starting off with the up-down volume ratio. The up-down volume ratio is an internal that we use to gauge the selling pressure and the buying pressure in the marketplace. So if we take a look at this number here, the more negative it is, that means there are more selling pressure than buying pressure, versus when it's more positive, that implies there are more buying pressure. So let's go back and look at on Tuesday where Jay Powell was speaking, and we saw a S&P 500 close the day almost down 1%. And if we look at the up-down volume ratio, it was only minus 1.16. So that means there was only 1.16 times more down volume than up volumes. Normally when we see a day that the S&P 500 is down 1% or more, we typically see at least a 3-1 favor the downside. In other words, -3, -4, -5. That's sort of a ratio. So we are not seeing much of a selling pressure on Tuesday when Jay Powell was speaking. And if we look at the up-down volume ratio on Friday, where we got the job report, we see that the almost, the up volume was 2.9. So it's almost 3-1 in favor of the up volume versus the down volume. In other words, almost 3 times more up volume than down volume. And that kind of reinforced the buying pressure that pushed the S&P 500 up. And the other internal that we pay a lot of attention to is the daily advance decline. If we go back and look at Tuesday, the number of stocks that are declining versus the advancing stock there was only 500 more stock declining in price than advancing in price. So again, we do not see a broad market participation on the sell side that constitute this 1%, almost 1% decline from the S&P 500 on Tuesday. So that kind of implies that there's only the concentration of those heavy weighted stock in the S&P 500 that caused the S&P 500 to be down to close to 1% on Tuesday. Now on Thursday, when we have the jobless claim report came out, we did not see the S&P 500 to drop much at all. As a matter of fact, it was almost unchanged for the day, and it printed a sort of a spinning top doji type of a candle for neutral indecisive candle. But we did see a market participation on the sell side because we saw much more declining stock than advancing stock. The declining stock outnumbered the advancing stock by 913. So that means there are a lot of stock was basically in retreat in anticipation of the jobless claim. In anticipation of the job report for coming out on Friday. So the S&P 500 on Thursday was basically held up by those heavily weighted stock in the S&P 500, while the rest of the market was kind of, positioning themselves for the job report on Friday. Then on Friday, we saw a broad market participation on the upside because we saw almost 800 more advancing stock than declining stock. So we saw a little bit more broader market participation on the upside, and that kind of reinforced this upside momentum on Friday. Another market internal that we keep a close eye on is the new high versus new low. So we see that on Friday, the number of stock making new high outnumber the stock making new low by a margin of 142. But also we pay attention to the actual number of stock that make new 52-week high and 52-week low. We notice that on Friday, we only saw 14 stock make new 52-week low, while there were 156 stock make new 52-week high. So that is, holding up relatively okay, right? Because we'd like to see it up at the 400, 500 level, and that kind of tells us that the market is in a accelerated advance as it expands the number of stock that making new high. But right now it's sitting somewhere around that 200 level, and it's been hovering around that 200 level. So it's kind of holding steady. The other thing to pay attention to is that the decline in the number of stock making new 52-week low, and that kind of reinforced that the market is holding up quite well because it's not deteriorating by the expansion of number of stock making new 52-week low. Another internal that we pay attention to is the cumulative advance decline line. And this is the cumulative sum of the difference between the daily advance and decline. So we're basically running a cumulative sum. So when the line is going up, that means the market is also continue showing strength. If the line is declining, then that is showing the market is getting weaker. So right now we are seeing that the market is pretty much, kind of leveling off up here at the high on the cumulative AD line. So it's kind of holding steady, and also we saw a little bit of acceleration from the S&P 500 the last couple of days, and due to the Friday job report boost. So again, we are looking at this internal telling us that the market is not deteriorating. Now, if we take a look at these internal in the Nasdaq market, looking at the up-down volume ratio going back on Tuesday with that, Jay Powell speaking day, we did see a little bit of a more selling pressure in the Nasdaq market, and we're looking at a 2.36 to 1 of minus 236. So we are getting almost 2.5 times more down volume than up volume on Tuesday. In addition to that, looking at the daily advance decline, we have over 1,800 more declining issue than advancing issue. So you can see in the Nasdaq market, we have a broader market participation on the downside than in the New York Stock Exchange, because we did not see that many, declining stock outnumber the advancing stock, and also the up-down volume ratio was only minus 1.1. In the Nasdaq case, it's almost 2.4 to 1 in favor of the downside. Friday, we did see a substantial improvement because we see a 3.2 to 1 in favor of the up volume on Friday. So there's 3.2 times more up volume than down volume. And also we're seeing a broad market participation on the upside to help push the Nasdaq 100 up. And we saw over 1,500, almost 1,600 more advancing stock than declining stock. So that shows us that the Nasdaq market also coming back up and showing some strength into the Friday's close. And just like what we saw on the, in the New York Stock Exchange, we are seeing in the Nasdaq as well. We are looking at more stock making new 52-week high than 52-week low. Although the middle of the week, like Tuesday, Wednesday, and Thursday, we did see a little bit of a modest more stock making new 52-week low than number of stock making 52-week high. And on Friday, we saw 67 more stock making new 52-week high than 52-week low. And looking at the actual number, on Friday, there were 164 stock make new 52-week high versus 97 make new 52-week low in the Nasdaq market. So the number of stock, the 52-week high versus 52-week low in the Nasdaq market is not quite as robust as the New York Stock Exchange, but nevertheless, it's not deteriorating. Now, looking at the cumulative AD line in the Nasdaq market, it is showing a little bit more weakness in the cumulative AD line in the Nasdaq market. We see that it's been declining while the Nasdaq 100 is trying to make a move up. So it is a little bit of a divergence here. We got to pay attention to that. So before we move on to take a look at the price action of the SP 500 and the Nasdaq 100, let's just kind of take an overlook at the indexes here. And you see that none of them have made a new all-time high last week, but the New York Stock Exchange Composite did close with a new all-time closing high. Now let's take a look at the price action, starting with the ES, the E-mini S&P 500. As you can see on Friday, it finished with a little bit more of a hangman type of spinning top type of candle here. And also is sitting right underneath this resistant or potential resistant trend line. Now we did see it come up off of this inside candle here. So essentially it broke out of this inside candle, inside day. So it's like an inside candle breakout. And right now we're sitting up at this edge here of this balance area. So for the coming week, we're going to see would it be able to push up and get above this Globex all-time high near the 3830 level. Now in the past, this Globex all-time high always get tagged by the regular trading hour session. And since the E-mini S&P 500 future and the S&P 500 cash index track each other, and this implies that if the ES come up and take out this all-time high, the Globex all-time high, that means the S&P 500 will also come up and put in a new all-time high. So that's basically what we are waiting to see is when this come up, take out this Globex all-time high, and the S&P 500 make a new all-time high. Now, for the coming week on the upside, if it could be able to take out this all-time high, then we'd be looking at this 5873.75, which is a 1x extension of this balance area, the range of this balance area. So if it could come up here, then we could eventually see it also make it up to the upper range of the weekly expected move, which the market is pricing in somewhere near the 5890 and 5885.50. And if we take a look at the downside and say this is a little bit of a fake out and unable to break out and hold it and start reverse back down, then we'd be looking for this thing to break down from this 5742, which is the lower edge of this balance area. And if it does break down, then we'd be looking for this thing to come in to this balance area and get down to the 5228.25 level. So then we'd be watching the possibility of getting into this lower range of the weekly expected move between 5705.50 and 5655. And also in addition to that, we also have a trend line coming up, and this could pose a little bit of a support there if it could hold this trend line. So those are the level to keep an eye on for the E-mini S&P 500 for the coming week. And for the SPY, the ETF for the S&P 500, we're basically looking at a similar type of price action as the E-mini S&P 500. Well, we're essentially looking for a move up to take out the all-time high at 574.71. So we could come up and we'll look for a push into this 579.11, this 1x extension of this balance area, and possibly come up to the upper range of the weekly expected move, which the market is pricing in 582.50 and 582. So that would be the upside scenario. Now, if we do see a fake out from this move up and then start coming back down, then we'll be watching for a breakdown from this balance area lower edge of 566.39, then move into this balance area here, and that would be 563.57. Now notice the lower range of the expected move is being priced in somewhere between 564 and 560. So we could see the price to come down into this lower range and also into this trend line here to test for potential support. And looking at the NQ, the E-mini Nasdaq 100 future here, we see that it also put in a hangman doji type of candle. And right now, we're basically looking for the possibility of an upside move to take out this 20,385.50. If we come up here, then we'd be looking for a potential gap fill and move up to this 20,661.25. Now, if it could not come up to this gap fill and get into this balance area, then we'd be looking for it to come back down and possibly move into this balance area here and dip below the 20,000 level and get into the 19,941 and possibly move its way down to this 19,532. And looking at the QQQ, the ETF for the Nasdaq 100 on Friday, we see a Greystone doji here. So right now we are looking at the possibility to see will the price continue to push up into this 491.95 and essentially come up to do this gap fill here and into this balance area. If it could move above this 591.95, then look for the possibility of pushing up to the upper range of the weekly expected move, which is between 498.30 and 497.20. Now, if it is unable to get up to this 491.95, instead of come down and break below this 482.83, this high volume node here, then we'll be looking for a push down into this low volume node near the 478.01, which is also in confluent with the lower range of the weekly expected move between 477.50 and 473.50, in addition to the trend line here for potential support. So those are the upside and downside level to keep an eye on for the QQQ in the coming week. So overall, the market internal and also the sentiment is telling us that the market participant and the market as a whole is pretty much in a neutral zone right now. The sentiment is not, bullish or bearish. Neither are they fearful or complacent. And also in the internals, they are not showing sign of a market deteriorating because we're still seeing a strong up-down volume ratio and also daily advance decline. Although we did see a little bit more broader participation on the downside for the Nasdaq versus the New York Stock Exchange. And based on these internals, they are not showing the market is weakening. If you found some useful information in this video, be sure to click the thumbs up to give it a like to help promote this video on YouTube. And if you'd like to see additional contents from me, be sure to visit my newsletter at Substack. You can find the link in the description below. And also, if you are new to this channel, click on the subscribe to help support this channel. Thank you for watching and good luck on your trading.